Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right. Welcome to the show. I'm excited to have my guest on the show today, Jon from Agate Hound Fund. He's, really an interesting person. I've gotten to know him for the last couple of months. Jon Staenberg, he's been an active private equity investor for over 30 years, serving as a general partner in 3 funds. He's managed over $325 million in assets, and his fund is a fund of funds strategy that invests in search funds. So I know I've had a bunch of private equity fund managers on the show. I've had a bunch of venture funds on the show. We're going to go deeper into search funds. When you really think about search funds, what do you think of? You think of the Harvard grads that maybe take a summer away and try to go out and maybe become a co-founder and just go out and buy a company and operate the company. So that's what I've been thinking, when I think about search funds. But, there's a really amazing strategy because obviously when you're buying businesses, oftentimes, different than venture capital, those businesses already have revenue. The ones that I've been looking at in the past as potential opportunities have also been profitable. And I know there's different sectors. So I know we're going to go really, really deep on the industry and, kind of the strategy. But I got to meet Jon because we did this private equity LP retreat in San Francisco. And, Jon was able to pop in for a little bit. And he's no stranger to wine. He had his own vineyard in Argentina. If you check out handofgodwines.com, he'll go into a little more detail about that, part of his life as well. He was also at Stanford GSB where, when the asset class was just being formed. So excited to talk to an OG and talk about all things wine, talk about all things, search funds. So, Jon, welcome to the show.
Hey, Joel, this is really fun. I'm really great to see you again, and all the topics you mentioned, I hope we get to go into. I'm very passionate about what I'm doing currently, and it's been a fun path to get here.
Yeah, well, let's start from the beginning. I know it's been probably a while, maybe. I'm not sure. I mean, I've seen you on some podcasts and, you've probably, shared your story. But for my audience, would really appreciate you kind of starting from the beginning. I know on your bio, it talks about you going to Stanford, but tell me what you thought you would do. Tell me what you were interested in as a kid, what got you curious, and walk us through kind of your education, getting into private equity and now investing in private equity, private markets.
Yeah. So I grew up in Nebraska, and I usually start these things off talking about that because I'm a big Husker fan and I'm a big fan of the state. And I go back every year. I'll be there this year again for the Berkshire Hathaway meeting because Warren Buffett remains a North Star for me, and someone who I continually reread his quotes and his thoughts, and it's a grounding kind of set of principles and values. And coming from Omaha, there weren't a lot of expectations. And so for me, I think that enabled me to see the world differently. And I was lucky enough to have a set of parents that encouraged me to think outside the box. My mother was an entrepreneur. My father was an entrepreneur. And I just grew up in that environment. And honestly, going out to the West Coast was as much about seeing the world and thinking outside the box as anything to do with any kind of brand name school. I didn't really even know. And really, it's only recently that Stanford has had the brand name that it does today because of venture capital in Silicon Valley. It was good then, but it's not at all what I was thinking about. It was either go to the East Coast or go to the West Coast. I wasn't going to stay in the Midwest. So getting out to Stanford, though, did change my life. It enabled me to be in an incredibly rich entrepreneurial environment of Silicon Valley, to be at a school that was doing things differently, that allowed you the leeway to create your own major, for example. I was one of those kids that probably overdid everything.
Mm-hmm.
I probably changed my major 6 or 7 times, as an example.
So what was your first major? What would you
pre-med.
think you pre-med?
Pre-med,
Okay.
man. I was like, oh my God, I am not going to be able to compete here.
And you're talking to an Indian guy that has been bashed over the head with, like, going to med school or being an engineer.
Well, Jewish parents, Indian parents, there's some similarities, man.
I was like, okay, whatever you tell me, and I ended up, getting a doctorate, that was the closest I can get to. I was like, are you happy? Are you happy now? They're like, no, we're not happy. You're not married. Okay, cool.
Exactly. So, of course, we grew up in an era where you actually wanted to appease and please your parents. And that, of course, was part of it. But I was also, growing up, this is a long time ago at this point, mm-hmm. It was a different world, right? It was a simpler world. Mm-hmm. I played a lot of tennis growing up. I loved competing. And I loved, for me, going to college was the ultimate TED environment. It was TED before TED. It was a mental spa. Mm-hmm. It was a brain spa. It was a chance to say, I'm interested in astrophysics. I'm interested in geography. I'm interested in Buddhism. And I could just explore that. And so many people are so career oriented today and following the path that they think will get them to the right place. It's kind of tragic, in my opinion. Anyway, I was lucky and I got into Stanford and went there. And I just thought to myself, how can I use this time to meet the coolest people? I'm a people person, and try as many things as I could. And when I graduated from Stanford, I thought I should do something good for the world. So I did a Peace Corps-like program that sent me to Taiwan, actually. And I spent 3 years there learning Chinese, teaching English, doing all kinds of exploring of the world again. I was lucky because I had gotten into the business school from undergrad, and they were nice enough to say, you could come now, but really take a couple years and you'll still be admitted. So that gave me the chance to then again try something else. And I went to Dallas, Texas to do real estate. Mm-hmm. Again, the common theme here is not doing what other people necessarily would do, and certainly not doing the things that would be repeating what I'd already done. I was also a kid that was a voracious reader. I would go to the library and read every entrepreneurial magazine, Inc., Worth, Entrepreneur, Forbes. I would rip out articles. I would highlight things. I put them into files. The act of doing that, even though I rarely went back and looked at those articles, was setting me up to constantly be inspired by what other people were doing and think, could I do that? What could I do differently than what they were doing? How does it relate to an adjacent field? And I'm lucky because 2 things I did in high school that I think really formed who I am even today. I took a debate class, the Nebraska State Championship in debate. And I also was an editor on the newspaper, and that taught me to ask questions. And both those skills are extremely important for what I do today of making cogent, logical arguments and to continually ask questions and have a growth mindset. Anyway, I went to the business school. And if you want to pause me at any point, you got me on a roll, let me know. But I went to the business school, and there, of course, I saw Silicon Valley in a way I hadn't seen it before. I saw what was happening with technology. I remember the first Apple computer I played on. I remember before that even a word processor. I took a CS class when nobody did that. And I was like, this is going to change the world.
Sure.
And when I got out of business school, I did what I'd always done. I went to a place I'd never been. I had a friend at Microsoft who said, hey, you're probably not even thinking about, you don't know about this company. You're not thinking about this company. But hey, here's a free trip to Seattle if you want to at least come up and see what Seattle is. I thought, why not? I ended up having extraordinary interviews with extraordinary people and said, I should do this because I know I'll be better after it and through
Sure.
it. And so that got me really ensconced in technology. But I'd always known coming out of the business school that I wanted to do venture capital because it's venture capital for me was the perfect set of elements that I love. Constant learning, the entrepreneurial energy of it, thinking about the future, getting every day a new input, a new way to think, all of that, the deal. I love all of that. And so I knew even going to Microsoft that I wanted to do that. In about 5+ years out of into Microsoft, I said, it's time for me to go do the venture thing I've been talking about.
Sure.
And so I went out and formed a small fund and did a second fund and then became part of a third fund. And I had a 25+ year run doing that, both in the funds and angel investing. And it was extraordinary. I felt like I had a front row seat to the world changing. And about 6 years ago, I said, wait a minute, venture has changed. And I'm not sure I can offer venture the same thing I could offer it before. I'm not sure I'm as good at it anymore. And I think I should really reconsider what I'm going to continue to do because I'm not going to retire.
Look, I'll say this. I mean, there's been a handful of managers there's one that was pretty prominent that put out a public post saying, look, I'm not going to do venture anymore. And he was, I think he was on his third fund. The third fund wasn't really that big in general, right? So it's, and some managers do this and they do really well. They have the same exact fund size. They have the same exact strategy. And that's very attractive to LPs because it is predictable. If it's not broke, don't fix it. You definitely really have to be able to manage, over 100 million. And you're going to be doing that and managing that with a different level of infrastructure than you are with your, exact same strategy at 25 million. But, this person wrote this open letter and he's like, look, this is my last fund. And the reason why is because, look, there's like Gen Zs that are raising more money than me. And there's 22-year-olds that are going out to market. They got better deal flow because some of them, I've seen some managers and, we talked about this. I have an accelerator for managers, right? So some of these managers that have gotten institutional capital, some of them started out just running the fund as like a side gig. They had a tech job that was like a high growth startup. And then they ran the fund part-time. And that was really their edge because they're hanging out at all these founder happy hours. Like this OG that's been doing venture for 20 years, they may not get invited to those AI co-pilot, meetups, right? Because it's just so sector focused. And it's not even about ageism. It's just about just being in those ecosystems. And you're not working at the tech company and going to those smaller micro ecosystems. You're just not invited because you've been in the game for so long that you just are not.
I think that's right, Joel. Circles. I think there's two things. One is relevance. I'm not as relevant, quite frankly. And the second thing is, as a fund manager, how can I create my differentiated value add? If I can't answer that question, which many emerging managers actually can't, which is why many of them are going away, then I should not be doing that. When I started doing venture capital, it was super clear. My unique selling proposition, right? It was I connected the Northwest to the Bay Area. I was at Microsoft at the time. Everyone wanted to know, was Microsoft a friend or a foe? Could I help them partner? Could I help them? No. That doesn't matter today. That USP doesn't matter. So, just breaking it down, I thought, what am I doing here? I love venture. I have friends that are very good at it. I'll invest in them to stay in the door. I still do my venture-related dinners every single month where I bring founders and investors together because I love the asset class. I love the people in it. But I couldn't take people's money and look at them in the eye and say, I can be a good steward of this anymore. There's better ways for you to play that asset class.
Sure.
And about 6 years ago, when I made that determination, I went back and visited one of my very favorite professors. Well, he would laugh if I said this, but I kind of think of him as the Warren Buffett of the GSB professors. His name is Irv Grossbeck. He's in his late 80s, wise, kind, sincere, authentic guy who invented search funds. He's the OG. You're talking real OG. And I went and saw him and I said, Irv, I don't know why I never really understood how good search funds are, but I'm here now and I want to get involved. And he said, great, and he talked to me about it and has been an advisor to me. But I said, the problem I have is the search fund community is unique in that the people investing in it generally have previously been searchers where they went out and acquired a company, ran it, built it, grew it, and sold it to private equity. So when they go and join boards and invest in the searchers, they are bringing that skill set and pattern recognition. I said, venture is great. It's just different.
Sure.
And the search fund community is a wonderful, tight-knit community that at the beginning, they're like, who are you? And it was a fair question. So I pivoted and said, well, if you can't fight them, join them. And I said, why don't I just create this first fund of funds for the search community? It's also called ETA, just so you know, Entrepreneurship Through Acquisition. And I created and raised a small fund last year, and we're invested in 8 funds, pardon me. And because those funds then invest in searchers, we created this platform where we're going to have 200 small business acquisitions across North America run by Harvard, Stanford, Booth, Wharton, MIT business school grads using this playbook in what is truly, we all know the expression MAGA. MAGA means make America great again. Small business is what makes America great, in my opinion. And so we have created a way to invest in MAGA. I'm laughing. But truly, if you want to know, right now, it feels to me, the world's topsy-turvy. There's a lot of uncertainty. Is inflation going to come back? Are interest rates going to go up? Is the stock market going to hit the skids? Are tariffs going to do this? No idea. But what I know is that search funds over the last 40 years have performed and continued to perform. And I feel very comfortable to say with the crazy baby boomer demographic that's coming, they call it the silver tsunami, this tidal wave of people needing to retire. I feel like this is going to be the golden age for this search fund asset class. And like 30 years ago, when I was at the front row, the first section, watching the venture world play out, I feel like that's what's happening right now in search funds.
Yeah, I totally agree. I think one thing that would be helpful for the audience is you unpacking the search fund ecosystem. So when we think about private equity, if I were to unpack that, we've got early stage venture, and then we've got growth equity, and then we have buyout, right? And then all three of those things blend into each other, right? Everyone has a different definition of what early stage is. And then, growth equity could probably blend into private equity, right? Just late stage, venture. And then some late stage companies do buyouts. They strategically, they're over like 100 million in revenue. So they're like, look, we're going to buy this small infrastructure company so that we don't have, they acqui-hire some people. And then there's some strategic acquisition at that level. One of my portfolio companies actually did that. They bought a smaller company to kind of add to the revenue that they already had to kind of push a higher valuation. So that's essentially like micro M&A, right? And then, through my accelerator, we've had we've had venture studios where there's a holding company. And then what they do is they go out and they build companies from scratch, and they do a bunch of experimentation, right? So they'll do like 100 experiments. Some of the companies blow up, and some of them actually stick and get some product market fit. From my understanding, I think the difference with venture studios, because you still have a holdco and you have more ownership, is they're still incubating and building. Where the searchers, they're looking at a business that maybe has a certain, it's probably, and you'll probably break this down, but certain levels of revenue and EBITDA and profitability.
Correct.
And then, they
Correct.
kind of figure out the multiple to buy them out. So that's my understanding of kind
Good.
of like,
That's a great high level understanding.
Yeah.
Let me
would love your take. Yeah.
Yeah. So Joel, as you know, I'm always out evangelizing and explaining and encouraging people to explore this asset class and ultimately invest in it if they're interested, because I don't know another asset class that has had the upside of 35% for 40 years net. Mm-hmm. It's never had a down year that I'm aware of. It's non-correlated to everything else. And it's got a playbook that is very defensible. So now I've said that, and I'm going to unpack it like you asked. So what are search funds? At the high level, it's private equity. At a slightly lower level, it's low-end private equity, meaning buying companies, mom and pop. What kind of companies? Pool cleaning, street cleaners, med spas, HVAC. In my 200 company portfolio, we'll have 125 different kinds of industries. Meter readers. We had a woman who was put a letter of intent on a horse transfer company for people who want to bring the horses in from outside the country. Mom and pop, ranging from Florida to Topeka to Montana. They can be anywhere because small business thrives in America. The searchers. So breaking it down, I said low NPE, and even within low NPE, this is a very defined, refined, and narrow niche. Okay. This is the Harvard, Stanford traditional search fund playbook.
Sure.
And by the way, I don't know if you do this at the end, but I would encourage people to come to our website, because I've got resources. You can look up the Stanford primer on search funds. You can look at the Stanford study. There's a lot of great books you can read on how to buy a small business, but we are very narrow in that we're looking for the top business school graduates. So we're taking 33, 34, 35-year-olds who have literally never run a company, but are really smart. They probably worked in private equity or consulting. They're really hungry. They're coachable. And we surround them with some brilliant, experienced investor, former operators, and teachers. And there's a very defined playbook on how you search. Search is hard. People spend a year and a half, 2 years trying to find a company to buy. How to then do the M&A, buy the company. And there's all kinds of pitfalls. You got to be careful there. And then how to actually run the company, right? So we're asking someone to do 3 distinct things to get to the end goal. And thankfully, these business schools have classes on how to do all this. They have seminars and conferences on it. And then the investors coach and mentor like a YPO forum to success.
Sure.
Does that make sense?
Yeah, definitely does. What are some of the industries that you are excited about? So, I think in my mind, I think when you're talking about recession proof, it's the essential services. So, things that you will always have to repeatably do all the time,
Right.
So you always probably have to, deal with childcare at a certain point in your life. And the beauty is there's always new people in civilization having new children, right?
Right.
So there's always going to be the need for childcare. But then I think elderly care is something that is inevitable, right? The market size is whatever the population is, right? The market size, there's 9 billion people on this earth. They all are going to be needing those services. I mean, everyone unfortunately is going to pass away at some point. So as less sexy as those industries are, they're just always going to be a sector that is going to have consumers all the time, every time.
Joe,
And it's not going away.
Good, boring. We love good, boring businesses.
Sure.
And the nice thing is I get asked that question a lot, like what industries? The nice thing, it's super broad. Okay. So as I said, we're going to have 125 different industries. What we look for is recurring revenue, growth. So we're looking for at least 3 years of continued growth. We're looking for this 2 to 5 million EBITDA. We're looking for non-regulated industries generally. We're looking for distributed customer concentration. So not one company, if they went away, would ruin the company, right? And once you start applying that set of metrics, it's quite broad because what you said is true. In middle America, any town USA, there's a set of industries that's going to be in every one of those cities and towns. Sure. And we love those industries. And by the way, when you think about it, I love being in an industry in a town where my competition is mostly retiring folks that have their homes and boats and their kids don't want to take over, and where my competition is still using fax machines.
Sure.
Because I'm 34, I'm tech savvy, and I'm hungry, and I've been to the best business school, and I've got a playbook. I'm coming in, and I'm gonna immediately make a change. I'm gonna immediately bring to it a new kind of thinking. And
I think, just even the boring, like, mom and pop accounting shop, right? If you just have a little bit of digital transformation shops, you can hire a developer and just like give us dashboard or like a login portal, like a, like a very minimal portal for people to kind of just download their 1099 or something like that, right? I mean, that would just change the game,
Well, and think about two sides to this. One side is AI. Like, not only do we have the baby boomer moment, but we also have a transformational toolkit for small businesses. So the asset class is averaged above 30%. What happens when they come in and they're able to increase efficiency and productivity using tools that they're already familiar with?
Sure.
I mean, it's pretty exciting. And so I'm most excited because it kind of doesn't matter once you set that criteria what the business is. What matters more is what's your entrepreneurial operating system that you're applying to it with the right jockey.
So you mentioned AI. I just posted this AI twin essentially that you built. So, for those, I'll see if I can share my screen real quick.
Oh, that'd be cool.
I think that would be cool to just show, and then I'll let you guys play with it on your own. But this was pretty amazing. And I'm thinking about maybe trying to set one of these up for myself as well. But like, if you go here, I pinged the link. So John, I actually called it, and you can actually call John and it has his voice and you're essentially conversating with his twin. So tell us a little more about this thing that you found, this thing that you found and how it's working.
Yeah. Thanks, Joel. Yeah. I hope people try it out because I want to hear feedback. But training on LLMs, training on the AI is actually pretty straightforward. I've done enough podcasts. I've written stuff. There's a lot of books, articles, YouTube, on search. There's enough about me out there. I can put a website. So you can even ask it what wine I like. And of course it's going to say, Hand of God wines, right?
Sure.
Sorry, I'm just getting rid of that call. But what's fun is people ask me all the time, what are search funds? What are search funds? And that's like a high level starting point. It actually takes some amount of time. It's not a 3-minute conversation because there's a nuanced answer to that question of why search funds, as defined by this traditional model, work so well. So I wanted to be able to provide a 24/7 me, right? That people could call when they're really bored and they need to go to sleep. They can call me and put themselves to sleep. But no, really, it does a terrific job of going through all the details. And really the breadth and depth of knowledge that's embedded in there is pretty impressive at this point.
Sure.
So yeah, I would encourage. And also, Joel, sorry, one more thing is it mirrors not just me, but it mirrors what I'm hoping to bring to the search fund community, which is more awareness and more tools to start applying to small business in tech and AI.
So this company, I was looking at the URL extension. So it looks like it's Delphi AI. So looks like they're a company that can create a digital clone of yourself.
Exactly. And
so what are the inputs? Do you just upload
you upload your voice? I gave it 4 minutes of my voice.
Okay.
And I put in 250 different inputs.
Oh, wow.
From articles, business school case studies, YouTube, podcasts, websites. And it just, can
you do it with a link, or do you have to upload
links?
Oh, links. Perfect. Oh, that's great. Yeah. Cause uploading would be,
I'll put this podcast in it.
Yeah, that'd be great. Yeah. That's actually really amazing. Yeah.
Like for example, one of the other initiatives that we're doing is we want the search fund community to be aware of a charitable organization I'm involved with called Founders Pledge, because it's a way for us to all give back if we've had a good exit. So I'll put Founders Pledge into my LLM. And when people say, well, what are your other interests? I can talk about why I'm so passionate about giving back and who the organizations I'm giving to. I can put in Hand of God wines. It can tell you, it will recommend which of my wines you should try.
Yeah.
That kind of thing.
No, it's it's interesting because I met somebody last week, and usually when I meet people, you and I didn't do this because we met in person, and I think we just chatted on WhatsApp. But usually sometimes if you kind of have a warm intro to somebody, obviously what do? You hop on a Zoom, maybe you'll, share one or two things, but there's a whole block of time that you use up just sharing what you do. So, I did, like, I actually sent these people a video, and I was like, hey, here's 20 slides. It's like a 50-second video, which just kind of summarizes what I do. Because if not, when I go on the call, I'm going to be spending the entire time just sharing that same nugget of information. So it's pretty cool because I actually, I sent that video over, and the guy watched everything. He digested everything. And then when we hopped on a call, we just talked about our families, and we talked about what we're interested in, and we talked about more human things. Because that thing was done. So I think with the AI clone that you have, if people are just trying to seek information about the industry and about maybe, about what you've invested in, that data, that's just literally data that's just ingested out, which you would do in your mind. But, if there's more intimate things that they want to do, which means like having a human connection, maybe there's a handoff there where it's like, hey, click on the Calendly to come to one of my nonprofit events, or like, here, sign up for the event. But, a lot of the stuff in terms of just kind of the information that's in your mind and just sharing that, I know it sucks to say this, but a lot of this is already just kind of automated now.
That's correct. I can't tell you the number of times, and I want to be, I want to give back, and I want to be helpful and mentoring. But a lot of people will say to me, could I do a call with you? I want to learn about search funds. Right. Well, now I can say, here, why don't we start here? And if you
have you tried to send that to somebody and see
yesterday? So
no, but you should try just as an experiment. I'd be curious because I'm actually really curious now. I want to play around with this because we have students and we have people on our platform that obviously spend time with it. But hey, everybody, don't worry, you can still book time with me. But imagine if like they just had basic questions about. You know what?
You just gave me a great idea.
You should send it. You should send it.
Calendly.
Yeah.
And say, would you please call me here first?
And then just see what they say.
Yeah. But I also want to make sure that people are understanding I'm playing with this stuff because I want to be smart enough to be able to recommend it from a hands-on approach, this and other tools, like we were talking about, to the companies that my funds are investing in.
I would
It's
say
got
too,
this
one
change-
thing that,
Yeah.
no, I was going to say one thing. Sorry, John, for cutting you off. I'll hand it back to you in a second, but I was just going to say one thing that triggered me when you said that you're not relevant. I do believe that you're relevant, and I don't think relevancy is the issue. I mean, I think it's really just attention. So, you probably know about like Cody Sanchez, right? Like, I don't think she's doing anything that's more relevant. She's not like, but she has the people's attention because she's built an audience. So I think the best fund manager, and we're already seeing this, right? The best fund managers are essentially media companies, right? So they're doing well, they're raising capital, they're getting access, they're getting invited. They're almost seen as like a mini celebrity because they have the attention. So you could actually be non-relevant, but look who our president is. He's gotten the attention, right? So if you can nail like the attention economy, I think that really is what it is. That will make you relevant, right?
What's fun for me, Joel, that prompted me to think of something. I've always been a guy that zigged when others zagged. And search funds are generally still under the radar.
Sure.
Right. And I love that. In fact, people in the search fund space have really had it to themselves for decades. And they're pretty uncomfortable with the recognition it's now getting. But it is, instead of maybe taking a teaspoon of sand to the beach of interest and recognition, now we got a bucket of sand to a beach.
Sure.
Like the opportunity set is so big that it's still early days. It's still so exciting just to give a perspective about why I'm doing this shift.
Walk me through the portfolio construction. So obviously you have a fund to fund.
Yeah.
So that's quite interesting. I don't know any other fund to funds that are investing
There are no other fund to funds. Now, obviously in other assets.
But for search, I think you're the only one. But walk me through the portfolio. I'm assuming the economics is similar, but like the portfolio construction for search. If you're, because I'm thinking there's two things, right? There's a searcher that may not have a fund structure. Like I know some people that actually are doing this and they have like just multiple, they're essentially SPVs, right? They're like little mini funds for that deal. And then a lot of times what they do is they roll it up. So unpack the different structures that you've seen. And the other reason why I'm asking is because on the venture studio side, they have like 2 to 3 different structures as well. They do have the holding company that invests directly in the companies, but then what they've done is they've gone out and raised a fund for opportunity capital to go out and scale those businesses. So tell me kind of like maybe the fundless version versus the fund version, and maybe 2 or 3 other flavors of how the structure is, and how that flows into the portfolio construction of being able to invest in these companies and generate returns.
Yeah, thanks, Joel. There's people called independent searchers. They don't go and raise the search fund. By the way, I hate the name search fund because it's confusing.
Sure.
People think it's Google, or they think it's like a venture fund, but it's not. It's a searcher. Pardon me. It's a searcher raising a pool of capital to pay themselves living wages for 2 years while they search.
Got it. Okay.
Come up with a better name for it, but
is that the management company?
Sure.
Okay.
But it's really the 1 or 2 people out of these top business schools and surrounding themselves with 10 to 12 investors who all add value.
Got it.
It's like a team going out to find something, with the searcher spending every day calling companies. You want to sell? Are you interested in selling? Okay.
Got it. Okay. I didn't know that. I didn't know the capital was going to the person and their personal, their living expenses and everything to actually run
travel, trade shows, a small salary.
Got it. Okay. So it's almost it's the equivalent of like whatever your 2% would be of the fund. It's the operating budget, but then and then when they search the company, what do? They use creative financing or
no. So, and there are different models. You actually were going down a different path, and we can talk about that later.
So this is the first one. So what's the typical amount of money that they're raising?
So let me take you through. Let me take you really quickly through that. My avatar is good at explaining this too. So they'll raise. I'm going to make up broad brush stroke numbers. I come out of Stanford, Harvard. I raise 50,000 units from 10 investors. Okay. I pay myself $125, $150 a year. The rest office, other tech, whatever.
Sure. Yeah.
I have 2 years to find a company. That's it. If I don't find it in 2 years, the investors have lost their $50,000 each one put in. Okay. If I find a company, the investors have first right of refusal to invest a much larger amount into the acquisition.
Got it.
The acquisition,
and that structure would be a special purpose vehicle.
Again, we don't call it that. It's just an acquisition.
Got it.
It's an LBO, right?
Sure.
It's buying a company, taking full control, but paying some portion in equity, some portion in bank debt, and some portion in seller financing so that they stay in the game. They have skin in the game through the transition. In addition, and that's really important. Because if you're going into an industry you don't know that well or don't have the relationships, you can't lose that immediately. You've got to learn that with the previous owner.
Sure.
And you set up incentives for the company to continue to do well. And if it does, the seller does better.
Sure.
Okay. And so that's why the traditional search fund model is very different from someone who says to me, and I have people who say this all the time, I'm going to go out and buy a company. And I say, good luck. You don't have anybody as a team around you who has seen this tens and tens, if not hundreds of times, and knows where the gotchas are and knows how to negotiate that, and then knows how to actually start day one implementing your EOS, your entrepreneurial operating system. It's an incredible model because the guardrails that come with it are so strong. And the thing that people don't get is buying a small business is messy and hard.
And it could be, I mean, what a lot of people think, in my opinion, is that you're buying into another job, right? Because you're essentially taking the role as a CEO.
Right. But with the search fund model, I don't know why you'd want to buy a job.
Yeah.
Honestly, the reason the search fund model is interesting, again, I'm going to just do a really quick dive on that, is that as a searcher, I get 25 to 27% of the equity.
Got it.
But I only get it in 3 tranches. Very important point. I get it if I acquire. I get a third. If I'm there for 4 years, I get a third. And this one's my favorite. If the investors get a 25% IRR, then I get another third.
Got it. So there's some hurdles in there to incentivize.
But the alignment.
Yeah.
Right. The alignment in venture is broken.
It is.
I'm an angel investor. I take all the risk and I get crushed later.
Yeah. No, I totally agree.
So that's and because we're buying profitable companies, we don't have a burn. Right. We don't need later rounds. Generally, I'm giving you the broad brush on this.
Sure. Yeah.
We may do so well that we want to buy, do a roll up of some kind, but broad brush, you understand the basic formula.
Yeah, you're in the green. You're starting in the green versus in venture, you're betting on an idea, right? And hoping that founder has the right idea.
And we're picking these jockeys from the best and the brightest.
Sure.
So it's fun for me. I always say, people go, what's AHF? And if I don't want to go deep on this conversation, I go, always have fun.
I love that.
Of course, it's Agate Hound Fund, but it's also always have fun.
Sure.
Right? Because for me, working with a younger person, trying to add value, coach, mentor, teach, train, is what I get up in the morning for. I had a conversation with a guy today who's going to be an emerging manager in search. And he said, John, there are nights where I can't sleep. I'm so excited. I said, believe it or not,
it's a good place to be.
Exact same way.
Because it could be the other way around where you can't sleep.
Of course. That's what most people are suffering from, right? Yeah. So Warren Buffett says he loves what he's doing so much he skips to work.
I love that. I read Charlie Munger's Poor Charlie's Almanac. I really love the chapter on Coca-Cola. I don't know if you read that one, but that's definitely a gem. Yeah, good book. Look, we got 4 minutes left. Give me a bullet on the wine. We didn't talk about that, right?
Well, it's funny. Thank you, Joel, for asking. I have been an entrepreneur. Yeah. I owned a chain of car washes. I owned a T-shirt company. I've owned a restaurant. I've owned an event space. I've owned a winery. So I know how hard this stuff is. That's why I have so much respect for people who are willing to do it. And about 18 years ago, I can't believe it's been that long, I went to Mendoza, Argentina, as much as anything, because I like to visit a new country every year. I like checking off. I'm getting to 100 and I want to see more. And that year was Argentina. And a friend said, hey, there's a Stanford classmate out in the Uco Valley in Mendoza in the winery. He's a winemaker, and I know you like wine. So long story short, I went out there. We spent 5 hours drinking wine. And I said, Santiago, your juice is ethereal. It's amazing. If I bought some land here, would you make the wine? He said, yeah, let's do that. And Hand of God was born. And by the way, I just went back in December. I hadn't been since COVID.
Yeah.
And I fell in love with it again. It's such a special place. If your listeners are going to Argentina, they should reach out to me. Happy to give them some tips and tricks. Where the update on Hand of God, though, is because I've had the run. I'm selling it all. All your listeners get 50% off the wine. There's about
all the searchers listen up.
45 cases left. I had someone write me last night and say, I've had this 3 nights in a row. I got to stop drinking it.
Yeah.
So it is fun when people, at the end of the day, wine is about community and connection. I serve it at my dinner, and I love it when people all over the country have a bottle and they write me and they say, thank you. And that to me is some of the most gratifying moments with the winery. So it's great. I've had so much fun with the community that's been created, and the wine's pretty good.
Yeah, and I totally agree. I mean, whether it's dinners or whether it's a vineyard, I just felt like that one day when we met up, I know you had to run, you had that meeting that day, but, it was just fun kind of hopping on a bus and taking a trip together to share some wine and, really spend time with each other for the whole day. So I think that's what it's all about, just kind of breaking bread with people and kind of doing stuff IRL, right, in real life, whether it's wine or food. So, hey, Jon, really appreciate it. All the storytelling, I'm definitely smarter, and I feel like I haven't extracted enough information from you, so that's why I can hand it off to your AI twin to fill in the blanks. But really love what you're doing. Next time you come out to New York, we'll maybe go out. I mean, don't publicly shame me here, but like maybe go out to North Fork or something. I don't know where else the best places are up here, but North Fork is.
It's all good. I'll bring a bottle.
Cool. Awesome, man. Well, thank you so much. And to the listeners, thank you for tuning in, and catch you guys later.
Thanks, Joel.
All right. Take care. Bye.